June 7th, Friday, so this is Bitcoin TV's channel, so how is the Bitcoin industry? So I'm Zhu, here are the 24-hour industry headline data from DeepCoin. Let's look at the short-term holder profit-loss ratio data, where the short-term holder profit-loss ratio surged from 1.99 to 10.89 over the past week, indicating most short-term positions are now in profit, with only a small proportion of short-term investors in a loss position. Historically speaking, Bitcoin's previous peak was at 73,000 and now it's just one step away. So the profit situation in the market is quite clear. Previously, the average cost basis for Bitcoin spot ETF institutions was around 66,000, which may have inched up a bit now, but is still in the 66,000 and 68,000 range. Is your cost basis lower than the institutions? Over the past half months, Bitcoin prices have been like a roller coaster, rising and then falling before entering sideways consolidation. But over the past week, Bitcoin has staged a strong rebound, directly challenging the 70,000 level. So exchange net positions have also quietly changed, entering negative territory and continuing to expand. It seems that after Bitcoin's return to the 70,000 highs, the market's bearish sentiment is becoming more pronounced. So however, the current bearish trend, although continuing, has not returned to the previous extreme level of heavy shorting. This may imply that investors are hedging and reducing risk at high levels. The previous all-time high is right in front of us, and many investors are watching closely whether the market will form a double top pattern. There may also be some sentiment boost in June from the upcoming Ethereum spot ETF trading launch. Yesterday at 5:04 p.m., Bitcoin mining difficulty saw an adjustment at a block height of 846,000, with mining difficulty decreasing by 0.79% to 83 T. The current network hash rate is 568 EHS. Over the past week, Bitcoin's hash rate has dropped significantly from around 650 E to around 580 E. This change is mainly due to two reasons. So first, there is an increasing risk of sentiment in the market in short term. And second, multiple overseas mining farms have temporarily shut down operations due to regulatory impacts, with Nigeria being one of the areas most affected. The recent fluctuations in hash rate have been relatively large, and a decline in hash rate and mining difficulty has slightly increased revenue for existing miners. With fewer competitors and lower mining difficulty, if this trend continues, miners' income is expected to see stable growth. Please like and follow us, and we'll help you sort out the news that gets you closest to money in the crypto, blockchain, and mining industry over the past 24 hours. So on May 24th, the SEC approved the 19B4 filings of multiple Ethereum spot ETFs, sparking market expectations that the SEC would subsequently approve the S1 registration statements and formally allow them to list. Currently, industry experts have different views on the actual approval timing. So with Kobo founder Discus Fish predicting it could happen as early as mid-June, Bloomberg analysts saying early July, and JP Morgan estimating November. So these predictions mean little in front of the SEC chair Gary Gensler, who needs to come out and speak as the decision maker.
Deeply in competition, and we in the U.S. benefit from very large capital markets, which are 5 times our banking system. $23 trillion banking system, $110+ trillion capital markets. Not Europe, not Asia. That competition.
U.S. SEC Chairman Gary Gensler said that considering the U.S. capital market, the approval of Ethereum spot ETFs will take some time. He said that although the SEC has taken an important step, the subsequent S1 registration statement approval process it may be slower. But what's interesting is that analysts smelled another good flavor from this news. Analysts Zahira Boudica and eToro Simon Peters both believe that the SEC's delay in the listing of the Ethereum spot ETF will be conducive to the short-term rise of ETH.
Why would keeping it hanging benefit Ethereum's rise? This is because before the ETF are formally listed, market participants have enough time to get in on ETH ahead of the potential capital inflows into the ETFs. This expectation has caused investors to flock into the Ethereum market, scrambling to buy this potentially hot asset. In this unpredictable crypto world, we may need to pay more attention to these unexpected blessings rather than solely chasing short-term gains. According to CoinGecko data, Bybit's 24-hour trading volume reached nearly 4 billion, making it the second largest crypto exchange globally, second only to Binance. Industry insiders analyze that Bybit's rapid business growth, especially spot trading volume once surpassing veteran exchange OKX, indicates Bybit may be seeking further market expansion. Earlier this year, in late January, Bybit formally applied for a virtual asset trading platform license to Hong Kong's SFC through its Hong Kong entity, Spark Fintech Limited. However, by May 31st, Bybit's Hong Kong entity and many exchanges withdrew their Hong Kong license application and ceased operations in Hong Kong as required. But then a bombshell came.
Cryptocurrency exchange Bybit has long been hampered by China's strict regulatory stance on the cryptocurrency industry, resulting in a blanket ban on registration and use by all Chinese users. However, recently Bybit suddenly opened registration and identity authentication to Chinese users. According to news, mainland Chinese ID cards can now pass Bybit's first-level KYC identity authentication, and according to Bybit's latest terms of service, China is not on the list of excluded jurisdictions. This decision not only made some employees and market participants feel uneasy, but also triggered various speculations in the industry about Bybit's strategic intentions.
In fact, China announced a ban on crypto trading back in September 2021, placing cryptocurrencies outside legal regulation. Therefore, Bybit's recent move is undoubtedly challenging this ban, and its motivation and purpose have naturally become the focus of attention. After all, Bybit had previously listed China as a non-service area. So what made Bybit make such a bold decision? Some analysts believe that Bybit may be doing this in order to further expand its market share and seek new growth points. As the second largest crypto exchange globally, Bybit already has a certain influence and market share in the crypto field. So, however, as the crypto market continues to develop, competition is becoming increasingly fierce. If Bybit wants to stand out in this market, it must find new opportunities and challenges. By trying to find a breakthrough in China seems overly bold. Last year, Binance and CZ faced allegations from the US regulators, and Binance's collaboration with many traditional entities faced major challenges as crypto institutions were allegedly choked by traditional finance. On August 24th last year, Mastercard's communications department stated that Mastercard and Binance would terminate 4 crypto card programs in Argentina, Brazil, Colombia, and Bahrain. On September 22nd, Visa also stopped issuing new co-branded cards with Binance in Europe starting in July. Neither Mastercard nor Visa showed specific reasons for any adjustments. A year later, with Binance having settled with the SEC and dusted off various legal disputes, has now reopened Mastercard and Visa for buying crypto.
According to Foresight News, Binance once again allows Mastercard users to purchase cryptocurrencies on Binance, and Binance-branded Visa cards have also resumed use on the exchange. Binance said withdrawal services using Mastercard will resume at a later date. The maximum single purchase limit is €5,000, which is approximately $5,440, and for USD-based transactions, the maximum purchase limit is $20,000. In addition, regarding the case of Binance executive Tron Gambarian being detained in Nigeria, the U.S. Digital Chamber of Commerce expressed concern about this, saying that Gambarian's detention was arbitrary and lacked due process, while the Nigerian side believed that the case Nigerian legal procedures were followed.
Binance is the largest crypto exchange globally, right? So we are the first one to put under scrutiny.
As the Biden administration faces mounting pressure, the focus is on accelerating diplomatic channels to ensure Gambarian's release. The legislators' call highlighted a key test facing U.S. foreign policy, protecting American citizens from unlawful detention by foreign governments. The outcome of this case would impact future diplomatic strategies and the regulatory environment for international business operations, especially in regions with complex legal environments. Currently, all eyes are on the U.S. government's response and the subsequent developments in the Nigerian courts. The turmoil in the stablecoin market, like the lack of transparency with USDT, has caught the attention of both parties in the US, realizing the urgent need to enact stablecoin legislation. USDC's market cap has neared $34 billion, but it remains unclear which agency should regulate it. Circle, the issuer of USDC, has expressed a positive attitude towards regulation, with its CEO emphasizing the importance of clear regulatory rules and hoping Circle can be regulated like banks to avoid placing funds in other banks. Like when Silicon Valley Bank collapsed last year, Circle's $3.3 billion in uninsured deposits at the bank, serving as collateral for crypto, were frozen, triggering massive public panic and causing USDC to plunge to around 0.8905 at one point, with 24-hour losses expanding to 9.63%. The Senate and House haven't been idle either. putting forward different versions of stablecoin bills that have undergone years of revisions but have yet to achieve a financial consensus. It can be said that as long as regulation hasn't landed in the stablecoin market, everyone wants a slice of the pie.
Stablecoin issuer Paxos announced the official launch of USDL, a stablecoin with earnings. Uniquely, USDL will be issued on Ethereum and use Ethereum smart contracts to distribute earnings generated from its reserves to eligible wallet addresses on a daily basis without requiring token holders to perform any additional steps. Regarding the interest part, Ronak Dias said in an interview that users can currently obtain an annualized rate of return of approximately 5% on USDL.
In the stablecoin market, USDT and USDC are undoubtedly the two giants. However, despite their massive market caps, they do not offer any interest yields to users. In contrast, USDL's 5% annualized yield is extremely attractive. For investors, holding USDL not only provides a stable value backing, but also allows them to earn considerable interest income. This will undoubtedly attract a large amount of capital to flow out of stablecoins like USDT and USDC and into the embrace of USDL. Although yield-bearing stablecoins like USDL are not the first, with the Mountain Protocol previously launching USDM, which also provided yields from purchasing US Treasuries, Paxos having previously launched BUSD, which at one point ranked third in the market share, likely has a more competitive advantage in terms of dealing with regulators and marketing capabilities.